Fansupermart.com.
What is your expectation for global markets in 2014?
In 2014, we expect market to be better than 2013, at least in terms of the equity market. Why I say so? Because of the economic recovery led by developed markets. Developed countries like US is going to report growth of about 2.6% GDP. And European Union is also will be coming out of the 2 years of contraction in the economy to post a positive growth of about 1%. And as we are aware, Japan is also under the economics that have implemented the few policy measures that will drive the Japanese economy to be a positive economic growth. All this bode well for the global growth and global markets.
What is your expectation for emerging markets in 2014?
The expectation for emerging market will be more on in terms of structural reforms, because emerging markets have been enjoying, I call it enjoying, meaning they have been receiving a lot of so-called easy money for the past 2-3 years. And as you are aware, most of this money is credit spur growth, is debt-driven growth, rather than real economic growth. So, and that is very key for the emerging economies to have have structural reforms, to make sure the economy is on the right track by reforming the economy, by restructuring the economy. For example, in China, we know that they have actually moved the growth rate down in order to enjoy a more sustainable growth in the future of about 7.5% or thereabout. Now, how do they do it? Is to restructure the economy from investment and also export buyers economy towards a more consumption-based economy and services economy, which we believe are more sustainable. So again, in the emerging markets, the other one is politics and also so-called political developments. I think there are certain political developments like in Turkey, in Brazil, in South Africa, in Thailand, that are so-called the key to look at. If all these political developments become more stabilized, surely the reform will be implemented better, and that will actually drive back the growth in the emerging markets.
What about your expectation for Europe in 2014?
As I mentioned, Europe has come back from the recession years. They have tightened their belts over these 2 years, particularly in terms of those countries that are most affected during the debt crisis. All right, the peripheral countries like Portugal, Greece, Ireland, and then all the other countries. Now, but we know that in Europe, Germany is a very strong economy. France also is a very strong economy. So this so-called positive development will be driven by these two strong economies, with the so-called the other countries are having tightened their belts for the past 2 years. They are showing signs that they are able to gradually come out of the contraction. But of course, in Europe, the one thing that we need to watch is the labor market. The labor market, averagely, there's still about 10 to 11% unemployment in the Eurozone, and some countries are even greater. So again, a lot of European countries hinges on notwithstanding the positive growth, there hinges a lot of structural reforms again. if the structural reforms in the economies are being implemented successfully, that will bring down the unemployment, all right? And that euro may have a very more sustainable growth moving forward.
Are there any countries or sectors that you are paying closer attention to in 2014, and why?
In 2014, as I have mentioned, the global outlook is more positive, all right? But we are actually in Asia, we are looking at developments in Indonesia, we're looking at developments in Thailand, all right, where it's closer home, number one. Number two, we know that these two economies are being affected in Thailand by political developments, unrest, and also in Indonesia is also the election is coming, okay? So we watch it closely, and if there are signs that the political situation concern are more stabilized, I think it's a very good opportunity to look at these two markets. Because if they have stronger governments, the reforms will be better implemented. And I think that these two are one of the two very so-called good economies in the ASEAN regions.
How should investors position their portfolios in 2014?
Okay, in 2014, I think we look at asset classes between equity and bonds. I will think that investor depend on a portfolio, but there should be more equity bias. That means that they seek for growth rather than a regular return like bonds. All right. So especially in the first half, we feel that it's still developed market-led growth, meaning developed markets like US, Euro, and Japan market, they are more favorable. Okay, the markets. But however, as we move through the years, if the emerging economies can benefit out of especially the export sector, then the economy of the emerging market can be more sustainable. Then, of course, when the valuation in the developed market become more stretched, all right, become higher, then I'm sure international fund managers will relocate their assets allocation towards more to the emerging market. Then, of course, Asia or emerging markets will enjoy a better market condition, number one. Number two, in terms of bonds, now, if investor looking at, as you are aware, the 10-year, the G10 10-year bond yield has spiked, all right? And it will continue to stay at a higher level in this 2014. Now, if not, will be a bit higher. Now, but corporate bonds are more, because of improving economy, corporate bonds are better, the earnings are better, so there are more quality corporate bonds, and their use will be higher. So which means that if investors looking at the balanced portfolio, we want to taper down their so-called asset allocation, become a more balanced portfolio, they could actually look at not only developed market equity or emerging market equity, but with some bonds, some balanced portfolio, corporate bonds in the emerging markets.